Welcome, everyone. Thank you so much for joining us for today's Appraisal Buzzcast. If you haven't already, make sure you're subscribed below and you'll get notified of the latest Buzzcast. Today, we'll be speaking with Joan Trice, CEO of Allterra Group, and Thomas Wade, the Director of Financial Services and Housing Policy at the American Action Forum, a center-right think tank in Washington, D.C. We'll be talking about the future of Freddie Mac and Fannie Mae and what it means for the appraisal and valuation industry. Joan, I'll hand it off to you.
Thank you and welcome, Thomas. It's good to virtually see you again and share a little bit with our audience about what your think tank does and specifically what you do.
So we are as Jim kindly said, a center-right think tank based in Washington, D.C. that focuses very much on the economy. We don't touch social issues at all. And the question Doug Holtz-Aiken, former CBO director who set up the AAF, really set out to answer was, sure, that's great, but at what cost? So every day I come in and I say, fine, the federal government, but at what cost? My specific focus is on financial services and housing, and for the last couple of years, my bugbear has been returning the GSEs to the private market.
Wow, all right, well then let's start.
Either that or burning them to the ground, but you know, one of the two.
Yeah, that's an incendiary, pardon the pun, statement. Yeah, I couldn't resist. Thanks for setting me up for that. So let's talk about, obviously, most are aware by now that Mark Calabria has been ousted and we have an acting director at FHFA. What does this mean?
What does this mean, or how did we get here? Which would you rather do?
Well, let's start with how did we get here?
Brill. Okay, so essentially, we're going to take you back very slightly to the 2007-2008 financial crisis. The Obama administration, this provoked an enormous regulatory response. The Dodd-Frank Act, as you may have heard of, is the most controversial aspect of this. But in the same time frame, the Obama administration created two brand new federal agencies, the Consumer Financial Protection Bureau in 2011 and the Federal Housing Finance Agency in 2008. And the FHFA was created to consolidate housing oversight and the regulatory response to the housing market, and also to oversee what then became the government-sponsored enterprises Fannie Mae and Freddie Mac. Now, the reason why I mentioned the CFPB and the FHFA in the same breath is what made them really interesting was the way the Obama administration constructed them to be, I think the phrase they used was shielded from political influence, whatever that means, and we don't need to discuss that. But structurally, what that ended up resulting in was a couple of very, very unique agencies. First of all, they were led by a single director, by comparison to, say, the Securities Exchange Commission, which is led by a 5-person bipartisan board. Second, that single director could only be fired for cause, i.e. not at the will or whim of the president, and had 5-year terms that would, extend beyond a particular administration's run. And thirdly, sort of less relevantly, both of these agencies were designed to be funded outside of the typical appropriations process. So very, very odd, unique beings here in DC. And pretty much from that moment, from the get-go, it were years of debate as to the constitutionality of both agencies. In June last year and in June this year, the Supreme Court, in two entirely separate decisions, finally came up with the answer, which is that the governance structure of both agencies is unconstitutional. And so this was the decision only a month or so ago that led to President Biden asking Director Mark Calabria to stand down, because the Supreme Court ruled that this single director structure, who could only be fired for cause, was not constitutional. And so this is the reason why we're in such a tremendously interesting juncture, not just because it's a relatively new administration, but also because we have to look ahead to where the FHFA will go from here.
Interesting. All right. Well, that obviously leads to the next question. You just posed it. Where do we go from here?
So the question is really for whom, but before maybe we drill into the detail, let's talk about the overarching implications. First of all, what is the backdrop this is against? Two things. First of all, as I'm sure I don't need to tell you, we're looking at historically high housing prices, up on about 15% from last year. Rents for the first 6 months of the year were triple what they normally are. One thing I found really interesting is that nationally, a house will now typically remain on the market for only 17 days. So first of all, we have an extremely hot housing market that the new Biden appointee, whoever it is, will be inheriting. And the second background context point is the fact that the new confirmed head of the FHFA will be inheriting what is a housing market that has been intentionally distorted by COVID-related regulatory mechanisms. So the most obvious one is the eviction moratoria. So this is a very hot and regulatory distorted environment that this person, whoever they are, will be inheriting. Given that it will be a Biden administration appointee, without even knowing who they are, there are a couple of things we can expect to see again at the highest level. We can expect to see an FHFA that will take a far more interventionist stance. So this is an expanded FHFA with a larger footprint in the market, seeking to meet Biden administration goals such as affordable housing, reducing artificially the prices of new houses generally, meeting environment goals. We may or may not see further amendments to the net worth sweep, which we can discuss if you're interested in. One thing in particular that I find really fascinating is I've always been very interested in following the qualified mortgage argument. This is the set of rules, or the QM patch, which allows the FHFA or the GSEs to lend to consumers who have a debt-to-income ratio exceeding 43%. So this is a CFPB rule, actually, somewhat coincidentally, that seeks to protect the most vulnerable borrowers from entering into mortgages at all. But for years, the FHFA has had an express exemption from that rule. And that's hugely controversial because on the one hand, we're getting Americans into housing, which is such an important step for economic security and the American dream. But at the same time, here at the AEF, we have the somewhat unpopular opinion that there is a portion of the population who should not be in housing or should not have mortgages because it doesn't make sense for their financial position. So it's going to be really interesting to see how a Biden administration appointee will come into that issue. Come into that QM
Let's do this. That's a sticky topic that I really want to dive into because it's intriguing to me. But let's do this. Let's break for a commercial message, and when we come back, let's talk about the QM patch.
Of course.
Thanks, Joan. Appraisers, stop waiting 30+ days to get paid on your appraisal invoices. Cicady Capital is a simple and secure payment platform that improves your cash flow and reduces the time you have to spend on paperwork and making collection calls. The process is simple. After the initial account setup, simply submit your invoices to Cicady Capital instead of your AMC or lender, and you'll receive payment the next business day, while Cicady Capital collects the payment from your AMC or lender, leaving you with more time to do what you want to do. For additional questions or to set up your account and get paid faster, call Cicady Capital Support Team at 208-953-7234. That's 208-953-7234, or email them at support@cicady.com. Joan, back to you.
Thank you, Jim. So let's talk about, first of all, share with our audience what the QM patch is. But my question for you is, I've been bothered by this myself from the get-go, and that is, we seem to have had collective amnesia that Dodd-Frank came about because of predatory lending practices, and that's how we ended up with the CFPB to protect the consumer from predatory lending. But we made an exemption to allow people with really high debt to continue to buy mortgages to have mortgages that they can't afford. That is not helpful. That does not help the affordable housing sector. It's smoke and mirrors, and I think it's a dangerous path. But now I'm putting words into your mouth. You're the expert.
Joan, I couldn't agree more. And I do wonder if at some point on a definitional level, it can't be predatory lending if it's the government doing it, but we can table that conversation for another time. So exactly as you say, the QM patch was created to allow the GSEs and the FHFA to circumvent CFPB rules, preventing those with a really, really high debt from getting mortgages. And to be absolutely clear, we're not saying these people should not be in homes, should not be in housing. We're saying these people should not necessarily be in a traditional mortgage because they're at a higher risk of default, and that's not good for anyone.
Right.
And so it doesn't make it that much sense to me that the QM patch was developed to allow Fannie Mae and Freddie Mac to meet these affordable housing goals, to meet these LMI housing goals by putting these people in homes. And for years, we've gone backwards and forwards. And I think it was one of the more impressive things about the Cranninger CFPB that we got to this position where it was announced, was it last year or the year before, that the QM patch would be allowed to expire. The current position is that the QM patch was going to be allowed to sunset or expire, but has been extended to at least next year. And that's why it's such a fascinating time, because at the point where that decision has to be made, we're going to see a new director at the FHFA and a new director at the CFPB. And it's going to be so fascinating to see what direction they take it in. But if I had to put money on it, I'd suggest that the QM patch will be allowed to continue to meet those affordable housing goals.
Interesting. Well, let's take another quick break. And then when we come back, let's talk about the privatization of Fannie and Freddie. And is that a Biden administration, is that on their agenda or not? Jim?
Thanks, Joan. In uncertain times, you need a certain partner. You don't have to sacrifice top-notch coverage for an affordable premium. Intercorp has all the options and is sure to have just the right one to fit your specific needs. They provide the appraisal profession with competitive, best-in-class E&O coverage solutions nationwide. Having served the insurance needs of the industry for more than 25 years, Intercorp understands the risks you face every day. Whether you're an individual appraiser, appraisal firm, residential or commercial, or an AMC, visit intercorpinc.net to get a competitive quote today. Joan?
Thank you, Jim. So, Thomas, I mean, what are your thoughts on what the Biden administration is signaling as on their agenda for Fannie and Freddie?
Apologies, Joan. Can I send you on one quick detour first?
Yes.
You did a great job. You jumped straight to my third thought. But let's just quickly linger on that second one for a moment, which is, what does an expanded FHFA, an expanded role for the GSEs in the housing market, actually mean? What it means is far, far more risk. So before we even get to the conversation about privatization for the GSEs or GSE reform writ large, let's first consider the fact that, of course, I'm crystal ball gazing here, but it seems very, very likely that the Biden administration will use the FHFA to meet affordable housing goals, to meet environment goals, all of which means the FHFA will necessarily expand its role and its salience in the housing market. And so when I look at the work Director Calabria did, he very famously, when he inherited the FHFA directorship, the GSEs were leveraged 1,000 to 1, and by the end of his tenure got it down to 250 to 1, which just made us budget hawks very happy over here. Yeah. Because although I think the role of predatory lending in the 2007-2008 financial crisis is overstated and a conversation we can have another time, it is without a doubt that the GSEs, or then Fannie Mae and Freddie Mac, had a role in the housing finance crisis. And my fear is that as they get more leverage, they get larger, they get riskier, we're working towards a position where the next time there is a housing crisis, a housing crunch, we can't put the GSEs into conservatorship if they are currently there. I'm nervous about what this means for the GSEs going forward. And so, apologies, derailed you there very slightly, but I just want to make it clear that this is why GSE reform is more urgent than ever. But my suspicion is that the Biden administration will go in completely the opposite direction.
Okay, so my observation, Thomas, is we had a lot of no-doc loans made in the run-up to the crisis, and it doesn't earn me any brownie points with and I do have friends at the GSCs. I know it's hard to maintain a balance here, but in all fairness, I think what we're now doing, what we previously did on the credit side, we are now doing on the collateral side. We have 50% of all loans flowing through the GSEs are getting appraisal waivers.
Yes.
And to me, too soon to tell if there is risk injected because of the lack of the sort of guardrails that an appraisal serves to the housing finance system. But to me, that's just no doc appraisals. And what I'm more bothered by than the risk, because that's an unknown at the moment, is the disparate treatment issue. Only rich people, and I've been criticized for using the term rich, can get a waiver. The affordable housing, let's put it this way, the affordable housing sector, clearly, they're not getting the benefits of a waiver. And then during COVID, when lots of people were refinancing, the service sector, they didn't have jobs. They couldn't refinance. So what that's done is expanded the wealth gap, because the rich have been able to leverage the low interest rates, and affordable housing sector is still stuck, with maybe a mortgage that's a rate twice what somebody was able to refinance. So as you suggested a few minutes ago, we've kind of painted ourselves in a corner.
Exactly.
And we're kind of running out of ammunition to fight any downturn that is inevitable. When, I don't know, but let's do some crystal ball gazing. What do you think all that means?
So unfortunately, it's difficult to know at this point. Apologies for getting out of it with that. But if I can just really position it so that if you think about what Director Calabria did, and first of all, I think Mark deserves more credit for taking us further along the path of GSE reform than any administration or any Congress in the last decade. It was extraordinarily impressive and I think desperately necessary. But what was really interesting was that it was very, very obvious for Director Calabria that his position was that whatever GSE reform happened and whatever that looked like, the necessary preliminary step was that the GSEs be appropriately capitalized before they be reformed or released into the wild. And so he was almost sort of mono-focused on, in addition to reducing the risk that the GSEs pose and narrowing their product offerings and things like that, his entire bugbear was rebuilding capital at the GSEs. And the thing that I find quite fascinating about that is that if you meet Mark, you know that that was very much a personal mission of his. And it's unusual to see one person direct something as important as GSE reform over the last year. And that, I think, demonstrates how important the role of FHFA director is. And so I think with the White House report and with Director Mark Calabria's efforts on the capital rule and recapitalizing the GSEs, we put ourselves in the best possible position for GSE reform, but it's still really not that clear what that is or what that looks like. I could tell you what I would love the end result to be, but it is still difficult to work out how we get there and how we extricate the GSEs from the market or undo the 10 years of government funding advantage that they've had so that it can be a competitive housing market. And so what I think, in a way, what GSE reform needs is what it has always needed over the last 10 years, is a very, very clearly articulated vision for what housing in America should look like over the next 20 years. And Director Calabria is the only person to have done that at any point in the last decade. And so whether it comes, because it was impressive that the White House report did seem to come from Secretary Mnuchin at the time, but we very much need that one individual, whether it's an FHFA director or whether it's President Biden or someone in the executive office, to say, this is where we need to go and leave it up to the agencies and the FHFA how to get there. I think it is very unlikely that we will see that.
Yes, okay. Let's break for one more message. And then when we come back, Thomas, because I want you to think about this while we're on break. what is your vision of how you think Fannie and Freddie should look? Okay, Jim.
Thanks, Joan. ProxyPix is the first of its kind on-demand system for getting location-specific media you need from wherever you are. Their simple-to-use platform creates an online marketplace matching people needing property photos with proxies or data collectors near the requested location. Through crowdsourcing, you can get current up-to-date photos of anything on the map within hours, if not minutes. Never before has it been quicker or simpler to get the property photos that you need. Sign up at proxypix.com or download our ProxyPix app, available on the Apple and Google Play Store.
Okay, thank you, Jim. So, Thomas, what would you like the future to look like?
The GSEs, I alluded to it at the start, but I think burning them to the ground is an option. And I don't know how it is for you, Joan, but it's 100 degrees in DC today, so it doesn't feel like it would need a lot. But slightly less flippantly, our concern here at the AF, my concern has always been twofold. The first, that the GSEs have this implied line of credit, that they are in conservatorship. So ideal goal number one would be to have a purely private housing market and have the GSEs be released into the private sector in whatever form. To my mind, that's almost more important than anything else. I don't want to say, because I know there will be another crisis and the GSEs will have to be taken back into conservatorship again, because that is deeply pessimistic and not particularly helpful. But I would like to have at least that nuclear option available. And of course, conservatorship was never intended to be permanent. The clue is in the title, and a decade on, we're still here. So number one would be privatizing the GSEs. Number two would be, how do we create and empower the housing market to be as effective as it can be? And the key to this, as the White House made clear in its report, is good competition. And so whether that is maybe moving towards what they call the utilities model, where we just have a couple of extra GSEs, because the problem we have with Fannie Mae and Freddie Mac would arguably diminish were there to be 4, 5, 6, however many.
Let me interrupt for a minute. What are the pros and cons of condensing them into one? Because it's been said by actually friends of mine inside the GSEs that there's only one thing worse than a monopoly.
Is it duopoly?
Duopoly, exactly. So what are the pros and cons of having mini GSEs regionally around the country versus one?
It's fascinating you say that, and certainly I think one of the reform proposals had moving a lot of the book from the GSEs into Ginnie Mae. And I remember when that came across my desk, and I thought, what would that change? What would that help? What would that fix? The answer is not a lot that I'm aware of, but again, we can table that conversation for another time. The key is, ideally, we would be in a position where the GSEs were entirely private, but as it is Fannie Mae and Freddie Mac, there isn't a heck of a lot of competition happening there. And were we to have, say, for instance, regional GSEs, they could do one of two things. They could either better focus on regional issues and offer regional products better tailored to the needs of those regions, or we could have something approaching actual free market competition, which would make the GSEs, well, in theory, competition would make them far more nimble and responsive to the needs of the market and the needs of the consumers.
Excellent. Well, this has been a fascinating conversation, Thomas, and I hope to invite you back and in the future, and we can continue this as events unfold. Thank you again.
Thank you, Jen.
Thank you, Joan and Thomas. That was a great conversation. I know that our listeners are going to be excited for it. And Thomas, will definitely have to have you back in the future when they have the new director appointed, and we'll get more information. And thanks to our listeners for joining us, as well as the sponsors who help us to keep putting these together for you. If you have an idea for a future Buzzcast or would like to be interviewed, reach out to us at info@appraisalbuzz.com and head over to the forums at appraisalbuzz.com and let us know how you feel about today's episode. Have a great day.